So the market gaining today?
Yes, the market gains today. The market went up by about 79 basis points. Really, we've seen a bit of exhaustion in the market. The market traded sideways for about 7 days, and the market broke its support level at around about 24,500. The market that went up today and closed at 24,888.
All right, so let's talk about what's been happening and excited the markets, and that was the launch of AMCON bonds in the last 2 days. The pricing, a yield of 11.8%, which looks better than the pricing of federal bond deals. What do you make of that?
We were quite surprised that the AMCON bond stopped at 11.8%, given that on the day of the auction itself, the FGN on-the-run bonds closed around 12.7%. Clearly, for a coupon-paying bond, 10.5% coupon-paying bond, I would expect the AMCON bonds to trade significantly higher. From our calculations and interpolations, we expected the AMCON bonds to trade at around about 13%, but the market's coming at 11.8%.
How must we understand this differentiation between the AMCON bonds and those of the federal government? What do we read into this?
Basically, the AMCON bonds are zero coupon bonds, as you know. The FGN bonds are coupon-bearing bonds. The AMCON bonds are similar to the FGN bonds in that they are backed by the full faith of the federal government. They are also denominated in Naira as well. So in terms of rating, they would be on the same level as the federal government bonds. However, where liquidity is concerned, as well as the coupon interest is concerned, you need to price those in as well. For that reason, we expect the AMCON bonds to trade significantly higher in terms of yields compared to the FGN bonds.
What's the impact of all of this going to be on the banks that AMCON has bailed out? Some experts believe that we could see these banks posting losses initially. Your view?
There are two windows. The AMCON bonds could be traded on the secondary market, even though we do not expect that to happen immediately. Secondly, if the market expects a deep discount on these bonds, then if I were a treasury banker, I would simply take the bonds to the CBN window and repo these bonds at 10% haircut, and then wait for a decent time to come back to the market to sell them if I so wish to sell them. So taking or booking a loss initially may not necessarily materialize. Especially, you have to consider that these bonds also can meet the liquidity requirements of the CBN and help the books of the banks as well. So chances are they might just keep the bonds in the held to maturity book.
Let's talk about inflation figures to be released and those that have been released, and what the central bank is doing to tame inflation. February inflation obviously came in at 11.1%. What are the expectations for March inflation?
We expect March inflation to be higher than February's inflation. Month-on-month inflation needs to be up by 0.1% for the March inflation numbers to be higher on a year-on-year basis compared to the February numbers. I would like to think that with oil prices at $125 per barrel, and food commodity prices also trading at all-time highs, I would expect that inflation numbers would be higher. And as such, the CBN took an hawkish stance, an aggressive stance at that, increasing the monetary policy rate by 100 basis points, anticipating what could happen in terms of inflation. Don't also forget, you've got the wages as well, the increase in wages from 7,500 Naira to 18,000 Naira. All of these should put pressure on the inflation figures in the coming months.
And will that put pressure on Nigerian bonds if inflation starts to tick up?
Absolutely, especially where we see the government coming through with the CBN coming through with an aggressive posture regarding inflation numbers. The central bank governor has indicated he would like inflation to be below 10% in the single digits. Obviously, the more we have pressure, the more we could see interest rates move upwards, and as such, you would find out that bond prices would correct as well.